Welcome to this explainer. So let me ask you a quick question. Did you know that missing just one single piece of paper could literally cost your Indiana business $10,000? Yeah, it's wild. Today, we're tackling a topic that is absolutely crucial for anyone doing business in the Hoosier State. We're looking at the often misunderstood, sometimes frustrating, but completely essential process of obtaining an Indiana sales tax permit. We're going to break down exactly what you need to do, why you need to do it, and how to get it done efficiently.
But first, let me show you exactly why you need to pay close attention. $10,000. You see, operating a retail business without a valid sales tax permit in Indiana, when you're actually required to have one, isn't just a minor administrative oversight. It's a Class A misdemeanor. And the Indiana Department of Revenue, well, they can assess penalties of up to $10,000 for every single transaction conducted without a valid permit. Just think about how fast that could completely bankrupt a business.
And honestly, the stakes go even higher than that. When you collect sales tax from a customer, those are considered trust taxes. Basically, you're holding the state's money. Failing to remit those collected taxes when the state officially demands them elevates the whole situation to a level 6 felony. On top of that, if you fail to file a return with the actual intent to avoid the tax, you can be hit with a devastating 100% fraud penalty. No way around it. You do not want to mess with that.
But hey, take a deep breath. There is absolutely no need to panic. Today, we're going to cover this step by step. First, why you need a permit. 2, who needs an Indiana permit. 3, preparing your application materials. 4, the step-by-step application process. 5, fees, timelines, and troubleshooting. And finally, 6, maintaining your tax compliance.
Let's jump into Section 1, why you need a permit. Essentially, it's your legal authorization to collect the 7% state sales tax.
Okay, let's dive into this. The official state jargon you're going to see everywhere is the Registered Retail Merchant Certificate, or RRMC for short. This is the official sales tax permit issued by the Indiana Department of Revenue. It basically serves as your business's unique ID within Indiana's tax system, and it gives you the legal authority to collect that flat 7% sales tax from your customers. And hey, here's some really good news. Unlike a lot of neighboring states, Indiana has absolutely zero local or county sales taxes. The rate is just 7% everywhere across the state, which makes compliance so much simpler for us.
Moving on to Section 2, who needs an Indiana permit? Let's identify who is required to register. And this brilliantly illustrates the two distinct ways your business actually gets pulled into Indiana's tax net. On the left side, we have physical presence. If you run a brick-and-mortar store, a pop-up shop, a food truck, a warehouse, or literally even just have remote employees located inside Indiana, boom, you have a physical presence and you need an RRMC. On the right side, we have economic nexus. This rule applies to remote, out-of-state e-commerce sellers who don't have any physical footprint in Indiana, but they do enough business there to trigger a legal requirement to collect tax.
So what exactly is that magic number for remote sellers? It is $100,000. If your gross revenue from sales flowing into Indiana exceeds $100,000 in either the previous calendar year or the current calendar year, you have economic nexus. And keep in mind, this includes taxable, exempt, and wholesale sales delivered right into the state. Now, it does exclude sales made through a marketplace facilitator, think platforms like Amazon. But otherwise, the second you hit that $100,000 mark, you must register.
Which brings us to Section 3, preparing your application materials. This is what you need to gather before you apply.
Form BT1. This is the primary business tax application in Indiana. Having completely accurate information ready for this form before you sit down to fill it out is absolutely critical. Simple omissions or tiny errors can massively delay your approval or even completely invalidate your application right out of the gate.
So here is exactly what you need to have on hand. First up, your Federal Employer Identification Number, or your Social Security number if you happen to be a sole proprietor. Next, you need your exact legal business name and any doing business as trade names you use. You are also going to need your primary NAICS code. That's the North American Industry Classification System. Make sure you pick the one that best fits your core activity, because using the wrong code can actually misassign your tax obligations. And crucially, you absolutely need the responsible officer information, which includes their Social Security number. Omitting or misidentifying the responsible party is a huge, common pitfall that will totally stall your progress. Finally, just have your primary mailing and specific physical location addresses ready to go.
All right, Section 4, step-by-step application process, navigating INBiz and Form BT1.
Now, what's really interesting about this slide is the distinction between systems. InTime stands for the Indiana Taxpayer Information Management Engine,
While you might kick off your broader business registration through the state's main INBiz portal, InTime is the dedicated specific system where you will actually be submitting your application, managing your tax profile, and eventually filing your routine returns. Let's break this state bureaucracy down into 4 super manageable phases. Step 1. If you're a brand new legal entity, like an LLC or a corporation in Indiana, you first register your business with the Secretary of State using the INBiz portal. Step 2. You head over and create your InTime account to handle the tax-specific registration. Step 3. You complete the digital form BT1, plugging in all that great data we just gathered. Keep in mind here, each physical business location requires its own separate application and fee, unless you are properly set up for consolidated filing using Form BT1C. And finally, Step 4, just submit the form and pay the fee.
Next up is Section 5, Fees, Timelines, and Troubleshooting. Let's look at the logistics of getting approved. Okay, are you ready for this? The total online application fee is literally just $26. Yep, that's a $25 statutory fee per location, plus a tiny $1 online convenience fee. I really want to anchor this minuscule $26 cost against those massive $10,000 fines and 100% fraud penalties we were talking about earlier. It is an incredibly small price to pay to legitimize your business and keep yourself out of some really serious legal trouble, right? Let's move to and see how this builds when we look at the timeline. Once you submit that $26 fee, the processing time is super fast. It usually takes just 1 to 3 days to get your taxpayer identification number and your permit number officially assigned. The actual physical paper certificate will arrive in the mail in about 7 to 10 business days. Now here is a vital piece of troubleshooting advice. Indiana requires you to begin collecting sales tax on the exact date your nexus was triggered, not just the date you finally got around to registering. So if you cross that $100,000 threshold and waited 3 months to apply, you might actually owe back taxes straight out of your own pocket for that gap period. Long story short, do not delay.
And honestly, you really don't want to make post-registration mistakes either. If you make a late payment, boom, it's a 10% penalty of the unpaid tax or a $5 minimum. If the state has to officially issue a notice because you completely failed to file, that jumps to a 20% penalty. Bounce a check, that's going to cost you a $35 flat fee. And filing an information return late, that'll cost you $10 a day up to $250. The state is extremely aggressive about compliance, and as you can see, these penalties add up really, really fast.
Finally, we reach Section 6, Maintaining your tax compliance, what to actually do after you get the permit. So, the crucial point is that getting the permit isn't the finish line. It's really the starting line of your ongoing operational responsibilities. First things first, you must display that RMC prominently at each business location. Have it out where folks can see it. Second, your permit automatically renews every 2 years, assuming your accounts remain in good standing. Third, and pay attention because this trips up so many business owners, you must file your returns on time, even if you are reporting literally 0 sales for that period. A late 0 return can still trigger a penalty. Lastly, keep track of Indiana's sales tax holidays where specific products might be temporarily exempt, just so you don't accidentally overcharge your customers. Okay, before we officially wrap up, I do need to provide a quick professional disclaimer. The information in this explainer is meant to be a comprehensive educational roadmap based on official Indiana Department of Revenue sources and guides. However, tax laws are incredibly complex and, let's face it, every single business is unique. I firmly advise you to consult a certified tax professional, a CPA, or a legal advisor to ensure you are meeting all specific requirements, properly determining your nexus, and setting up your tax structure perfectly for your situation.
Well, we've covered the heavy risks, the rules, the preparation, and the exact step-by-step process to navigate the InTime portal. You literally have the compliance roadmap right in front of you. So the only question left for you is, are you ready to legitimize your business and conquer Indiana tax compliance? Take that next step, get yourself registered, and operate your business with total confidence.